Getting rich is hard. Losing it overnight? Apparently, that's shockingly easy. Stick around. These stories escalate faster than a bad stock tip. Join our Telegram for smarter money moves and even crazier real-life disasters. Link in the description. Moral? Imagine waking up richer than your entire neighborhood combined. That was the reality for one guy who hit a massive lottery jackpot and immediately decided he was now the CEO of Doing Whatever Feels Fun, LLC. First week, new mansion. Second week, sports cars. Third week, lending money to people whose names he barely remembered. And by month 2, he had developed a fascinating business strategy. Spend money faster than it arrives, even though no more money was arriving. He threw parties that looked like a deleted scene from a 90s rap video, except without the part where someone eventually says, "Maybe we should invest." Friends multiplied overnight. Funny how that works. You win the lottery, and suddenly everyone remembers you from somewhere. But here's the twist. Taxes hit, bad investments hit, lawsuits hit, and those friends? They vanished faster than free food at a family reunion. Within a few years, he was broke. Not cutting back on Starbucks broke. We're talking full reset, like the universe hit Control plus Alt plus Delete on his bank account. Turns out, money doesn't disappear. It just changes owners, and sometimes very quickly. 2. The crypto genius who was smart. Until he wasn't. There was a guy who got into crypto early. Like, I bought it as a joke when it sounded like internet monopoly money early. At first, it was nothing, a few $100, something to brag about casually like, yeah, I've got some Bitcoin. Then suddenly, boom. The value exploded. His account skyrocketed into millions. Now here's where things get interesting. Instead of cashing out, he decided he was now a financial prophet. Every conversation turned into a TED Talk nobody asked for. "It's going to the moon," he said. "This is just the beginning," he said. So he held, and held, and held some more. Then the market did what markets do best. Absolutely nothing you expect. Prices crashed, not gently, not politely. More like falling down the stairs while holding a piano. He watched his fortune drop. Millions, to thousands, to maybe I should have sold levels. And the worst part? He didn't even lose it because of bad luck. He lost it because he believed he was too smart to lose. It's like winning at poker and then deciding you're now a professional gambler, right before the table reminds you who's actually in charge. 3. The businessman who built an empire. On one terrible decision. This guy wasn't lucky. He was disciplined. Built a company from scratch. Years of work, late nights, smart moves. The kind of story people love to post on LinkedIn with dramatic music. Eventually, he sold part of his business and became insanely wealthy. Not flashy rich, quiet rich, the dangerous kind, because you start thinking you're untouchable. Then came the deal. A friend, or what he thought was a friend, pitched him a can't-lose investment. Big returns, short timeline. Everyone important is already in, they said. That sentence alone should come with a warning label. Instead of doing his usual careful research, he trusted the room. Because when you've been right for years, you start believing you'll always be right. He poured in millions. And just like that, the whole thing collapsed. Fraud, mismanagement, smoke, and mirrors. Gone. The worst part wasn't just the money. It was the realization that one bad decision erased years of smart ones. It's like building a house brick by brick, and then deciding to test a flamethrower in the living room. Spoiler, the house loses. If you think these are wild, we've barely scratched the surface. 4. The athlete who spent like his career was permanent. You ever see someone get a huge paycheck and immediately start acting like it's gonna last forever? Yeah. This guy turned that into an art form. He signed a massive contract, the kind that makes headlines and distant relatives suddenly become supportive. Overnight, he went from regular life to private jets, luxury watches, and buying houses like they were sneakers. And not just one house, multiple, in different cities. Because apparently you need options depending on your mood. The problem? His career didn't last as long as his spending habits. Injuries happened, performance dropped, teams stopped calling. And suddenly, that guaranteed future wasn't so guaranteed anymore. But the bills? Oh, they were still very loyal. Mansions don't just disappear. Neither do car payments, taxes, or the 14 people on payroll who somehow became essential. Within a few years, he went from elite athlete to financial cautionary tale. It's wild how fast the lifestyle stays, while the income quietly leaves through the back door. Turns out, spending like a superstar only works if you stay a superstar. 5. The tech founder who cashed out. Then bet everything again. This one hurts because he actually did everything right at first. Built a startup, scaled it, sold it, walked away with life-changing money. This is the part where most people would slow down, maybe buy a nice house, invest safely, and enjoy not stressing about bills anymore. Not him. He decided, you know what? I'm just getting started. So he took a huge chunk of his fortune and poured it into his next big idea. Bigger risk, bigger vision, bigger confidence. And to be fair, it looked promising. Investors were interested. Early growth was there. It had all the buzzwords: disruptive, scalable, revolutionary. Then reality showed up like an uninvited guest. The product didn't catch on, costs exploded, investors pulled back. And suddenly, that next big thing became the next big problem. He kept doubling down, trying to save it. More money, more pressure, more denial, until one day, it was gone. Not just the new company, a huge chunk of his previous fortune too. It's like winning a championship, and then immediately betting your trophy on the next game. Sometimes confidence isn't your superpower. Sometimes it's the thing that quietly wipes you out. 6. The heir who treated inheritance like a weekend budget. Some people spend money carefully because they earned it. Others spend money like it's a temporary glitch in the system. This guy inherited a fortune. We're talking serious generational wealth, the kind designed to last decades, maybe even lifetimes. And he treated it like he had 72 hours to enjoy it. Luxury trips, wild parties, random purchases that made 0 sense. At one point, he reportedly bought things just because he could, not because he needed or even wanted them. It was like watching someone at an all-you-can-eat buffet. Except the buffet is money, and instead of food poisoning, you get financial collapse. Advisors tried to step in, family tried to intervene, but when you've never had to earn money, it's easy to believe it's just always there. Spoiler, it's not. Within a shockingly short time, the fortune was drained. Investments ignored, assets sold, debt creeping in like an unpaid subscription you forgot about. And just like that, generations of wealth disappeared in one lifetime. It's proof that money doesn't come with instructions, and if you don't respect it, it leaves faster than it arrived. 7. The day trader who thought he cracked the system. You know that moment when someone wins a few times and suddenly thinks they've unlocked the universe? Yeah, this guy had that moment, and then built his entire life around it. He started small, a few trades, some lucky wins, charts going up, confidence going way up. Within months, he went from cautious investor to full-time market genius. Quit his job, told everyone he was financially free, started talking about patterns like he was reading The Matrix. At first, it worked. Fast money, big wins, the kind that makes you refresh your account every 5 minutes just to admire your own brilliance. Then came the shift. One bad trade turned into two. Two turned into, I can recover this. And that turned into throwing even more money into the same sinking ship. Because here's the dangerous part. He wasn't gambling. In his mind, he was right. The market was just temporarily wrong. Spoiler, the market doesn't care about your feelings. Within days, massive losses wiped out not just his profits, but his savings too. The same app that once felt like a money machine now looked like a horror movie. It's crazy how fast confidence turns into silence when the numbers go red. Turns out, being lucky for a week is not the same as being smart for a lifetime. 8. The celebrity who didn't notice the money was gone. Fame is weird. It puts you in a bubble where everything just happens for you. This celebrity was earning millions. Movies, endorsements, appearances, money was flowing like a broken faucet. But here's the catch. They weren't managing it at all. They had a team, managers, accountants, advisors, the whole "don't worry about it, we've got it handled" package. And for a while, everything looked perfect. Until it wasn't. Turns out, someone on that trusted team had been quietly helping themselves to the money. Not in a dramatic, movie-style heist, No masks, no alarms, just slow, consistent draining, like a subscription you forgot to cancel, except it's your entire fortune. And because the lifestyle stayed the same, luxury homes, travel, spending, nothing felt wrong. Until one day, the numbers didn't add up. Accounts were empty, investments missing, money gone, legal battles followed, headlines exploded. But by then, the damage was already done. It's one thing to lose money because you made a bad decision. It's another to lose it because you trusted the wrong person to make decisions for you. Either way, the result is the same. 9. The restaurant owner who expanded too fast. This one starts like a dream. A small restaurant, great food, loyal customers, lines out the door. The kind of place people recommend with, "You have to try this spot." Success hits, and naturally the next thought is, let's open more. Second location, works. Third, still good. Now confidence is sky high, so he goes big. Multiple new locations, bigger spaces, higher rent, more staff, more everything. Because in his mind, if one restaurant works, 5 will make him unstoppable. But here's the thing, nobody tells you. Scaling isn't just copying success. It multiplies your problems too. Costs started stacking, quality dropped, customers noticed, the magic wasn't the same anymore. And suddenly, instead of one profitable business, he had several struggling ones. Bills piled up, loans kicked in, pressure built fast. Within a short time, the entire operation collapsed under its own weight. It's like cooking one perfect steak and then trying to run 5 kitchens at once without burning everything. Success isn't what breaks people. Trying to scale it too fast usually is. 10. The guy who won big and trusted the wrong expert. After a big financial win, we're talking serious money, this guy did what everyone tells you to do. Get a financial advisor. Sounds smart, right? Well, it depends who you hire. This expert came with confidence, suits, and a vocabulary that made everything sound complicated enough to feel legit. He promised safe growth, smart investments. Your money will work for you. And for a while, it seemed like it was. Reports looked good, numbers were stable, everything felt under control, except it wasn't real. Behind the scenes, the advisor was making reckless moves, and in some cases, not investing the money at all. It was a slow-motion disaster disguised as professionalism. By the time the truth came out, most of the money was gone. Legal action followed, of course, but recovering trust? That's harder than recovering cash. It's wild how convincing someone can sound when they're confidently wrong, or worse, intentionally dishonest. Sometimes the biggest risk isn't the market, it's the person you trust to handle it. 11. The online seller who forgot about taxes. This one feels almost harmless at first. A guy starts selling products online, small at first, then bigger. Then suddenly, it explodes. Orders coming in daily, money stacking up, that addictive feeling of, this is actually working. And here's the classic mistake. Every dollar feels like profit. So he upgrades his life. Better apartment, better car, better everything. Because in his mind, the business is booming. So why not enjoy it? What he didn't think about? Taxes. Not the small ones. The big, unavoidable, the government always remembers kind. Months pass, then a year. And then comes the moment every unprepared entrepreneur fears. The bill. A massive one. Way bigger than expected. Way bigger than what he had left. Because that profit he was spending, a big chunk of it was never his to begin with. Now he's scrambling, selling assets, trying to recover, all because he treated gross income like take-home pay. It's one of the most common mistakes, and somehow still one of the most brutal, because the government doesn't care how successful you felt. They care how much you owe. 12. The investor who couldn't walk away. This one is pure human psychology. He made a killing on one investment. Big returns, fast money, the kind that makes you feel like you've got a sixth sense. So naturally, he went back in, and again, and again. At some point, it stopped being investing and started being emotional attachment. Because now it wasn't just about money, it was about being right. Even when signs started flashing red, market shifting, risks rising, he stayed in. Why? Because walking away would mean admitting the ride was over. And nobody likes getting off a winning streak, until it's no longer a winning streak. When things turned, they turned hard. Losses came quickly. But instead of pulling out, he doubled down, trying to win it back. And that's where everything collapsed. Because the market doesn't reward loyalty, it punishes hesitation. He didn't lose everything in one moment. He lost it slowly, by refusing to leave when he should have. Sometimes the smartest move isn't making money, it's knowing when to stop. 13. The influencer who mistook fame for stability. Going viral feels like winning the lottery, except it comes with comments. This influencer blew up overnight. Millions of views, brand deals, fast money. The algorithm was basically throwing cash at them, and like a lot of people in that position, they assumed this was the new normal, so they upgraded everything. Luxury apartment, designer clothes, expensive lifestyle, all built on views and engagement. But here's the problem with internet fame. It's about as stable as a house of cards in a wind tunnel. Trends change, audiences move on, algorithms decide you're no longer the main character. And just like that, the views dropped. Brand deals slowed, income shrank, but the lifestyle? Still expensive. Within months, the gap between income and spending became impossible to ignore. It's like getting one big applause and assuming the audience will never leave. Spoiler, they always do. 14. The builder who ignored one small detail. This guy was doing everything right. Real estate projects, profits coming in, reputation growing. The kind of steady success that doesn't make headlines but builds real wealth. Then came one project, bigger than usual, more ambitious, higher reward, and one tiny oversight, a legal detail. A zoning issue, something boring enough to ignore, until it's not. Construction started, money poured in, everything looked fine, until it didn't. Regulators stepped in, work stopped, fines hit, lawsuits followed. That small detail turned into a massive financial black hole. Costs kept piling up, with no way to finish or profit from the project. And just like that, years of careful success got wiped out by something that didn't seem important at the time. It's always the small things. They don't look dangerous until they are. 15. The friend group that turned success into a group project. This one is surprisingly common. One person makes it big, business takes off, money comes in, and suddenly the circle around them changes. Friends start pitching ideas. We should start something together. I've got a great opportunity. Let's build this as a team. Sounds nice, right? Loyalty, trust, shared success. Except business doesn't care about friendships. Money gets involved, expectations shift, decisions get messy. And when things go wrong, because they always do at some point, it's not just business anymore. It's personal. Arguments start. Blame gets passed around. And suddenly the same people who were celebrating together are now fighting over what's left. The business fails, the money disappears, and the friendships? Gone too. It's like mixing family dinner with a boardroom meeting and expecting it to end well. Sometimes it does. But when it doesn't, you don't just lose money, you lose people too. And just when you think it can't get worse, it absolutely can. 16. The guy who turned one lucky deal into a lifestyle. This guy had one of those stories people love to tell at dinner parties. He bought something cheap, flipped it, made a huge profit. Clean, simple, impressive. The kind of win that makes you feel like you've discovered a cheat code for life. And instead of treating it like a lucky moment, he treated it like a repeatable system. So he scaled up. Bigger deals, more risk, more money on the table. Except here's the part nobody likes to admit. Not every win is skill. Sometimes it's timing, sometimes it's luck, and sometimes it's just being in the right place when something dumb works out. But he didn't see it that way. He started spending like the next deal was guaranteed, upgrading his lifestyle based on money he hadn't made yet. Then came the deal that didn't work, then another, and suddenly the system stopped working entirely. Now he wasn't just losing profits, he was losing his base money too. It's like hitting a jackpot once and then betting your entire life on the slot machine. Sometimes lightning strikes, but building your house where it struck, that's where things get risky. 17. The couple who won together and lost together. Faster winning money as a couple sounds like a dream. Shared goals, better life, no more stress about bills. This couple hit it big, and at first, everything looked perfect. Vacations, upgrades, living the life people scroll through and quietly envy. But here's what money doesn't fix: underlying problems. Small disagreements turned into bigger ones. Spending habits clashed. One wanted to save, the other wanted to enjoy it now. And when there's a lot of money involved, those arguments don't stay small. They get louder, more emotional, more expensive. Eventually, things fell apart. Divorce followed. And here's the part nobody talks about. Splitting a fortune doesn't just cut it in half. Legal fees, assets, emotional decisions, it drains way more than you expect. By the end, both of them walked away with far less than they started with. It's like getting a full tank of gas and then arguing so much you never actually drive anywhere. Money can amplify happiness, but it can amplify problems even faster. 18. The collector who forgot the market can change. This guy loved collecting, not casually, seriously. Rare items, limited editions, things that felt valuable because they were hard to get. And for a while, it worked. Prices were rising, his collection grew. On paper, he was getting richer just by holding on to things. So naturally, he went all in. More purchases, bigger investments, less diversification. Because why spread your money when this one thing is clearly winning? Then the trend shifted. Demand dropped. Prices softened. Suddenly, those rare items weren't so valuable anymore. And here's the painful part. When your wealth is tied to something illiquid, you can't just sell quickly. So he watched it happen in slow motion. Value dropping, interest fading, buyers disappearing. It's like owning a warehouse full of Beanie Babies right after everyone decided they're just toys again. On paper, he was rich. In reality, he couldn't turn it into cash. And eventually, the losses became real. 19. The employee who thought one big bonus meant a new life. This one is super relatable. A guy gets a huge bonus, bigger than anything he's ever seen before, and instead of treating it like a boost, he treated it like a lifestyle upgrade. New car, better apartment, more expensive habits, because in his mind, this was the new normal. Except it wasn't. The bonus was a one-time thing, a reward for a great year, not a permanent salary increase. But the bills he created, those were very permanent. Months later, reality hit. No more bonus, same expenses, and now he's stuck trying to maintain a lifestyle that was built on a moment, not a system. It's like eating at a 5-star restaurant once, and then trying to afford it every day. The experience is amazing. The aftermath? Not so much. 20. The risk-taker who went all in. One too many times. There's always that one person who loves saying, "Go big or go home." This guy didn't just say it, he lived by it. Every opportunity, all in. Every investment, maximum risk. And for a while, it worked. Big wins, fast gains. The kind of results that make cautious people look boring. But here's the problem with always going all in. Eventually, you lose one. And when you've risked everything, one loss is all it takes. That's exactly what happened. One deal went bad. Not catastrophic at first, but enough. Instead of pulling back, he doubled down. Because in his mind, the only way out was another big win. But the next one failed too. And just like that, the streak ended, and took everything with it. It's like playing a game where you keep raising the stakes until the table clears you out. 21. The quiet millionaire who trusted, "It'll be fine." This one is subtle, and that's what makes it dangerous. He wasn't flashy, didn't show off. Built his wealth slowly over years, smart choices, careful investments, nothing dramatic. Then came a period where he stopped paying attention. Not because he was reckless, just comfortable. He trusted that everything was set, that his systems would run themselves. And for a while, they did, until small issues started stacking. Bad investments, market changes, poor decisions from people managing his assets. Nothing huge at first. But together, they added up. And because he wasn't watching closely, he didn't react in time. By the time he noticed, the damage was already done. A significant part of his wealth, gone. Not from one big mistake, but from many small ones he didn't see coming. It's like ignoring a small leak in your house. It doesn't feel urgent until suddenly the damage is everywhere. And just when you think losing money slowly is bad, wait until it disappears overnight. 22. The freelancer who confused busy with profitable. This one hits close to home for a lot of people. He was working nonstop. Clients everywhere. Inbox always full. The kind of schedule that makes you feel important just by looking at it. And money was coming in constantly. So naturally, he assumed he was doing great financially. More work equals more success, right? Well, not exactly. Because he never stopped to check one thing: how much he was actually keeping. Between low-paying clients, rushed deals, underpricing his work, and saying yes to everything, he built a system that looked successful, but wasn't. Then came burnout. He slowed down for a moment, finally looked at the numbers, and realized something brutal. Despite all that work, the profit was way lower than expected. And when he tried to fix it, raise prices, cut clients, many disappeared. Suddenly, that busy life collapsed. It's like running on a treadmill at full speed and realizing you never actually moved forward. Being busy feels like success, but without profit, it's just expensive exhaustion. 23. The real estate buyer, who ignored one red flag. You know when something feels slightly off, but you convince yourself it's fine? Yeah, this guy built his entire downfall on that feeling. He found a property that looked like a dream deal. Great price, good location, potential to flip for serious profit. There was just one issue: a legal complication, something minor on paper. Nothing to worry about, someone told him. And because everything else looked perfect, he ignored it, bought the property, invested more money into renovations, time, effort, energy, all in. Then reality showed up. That small issue turned into a massive legal mess. Ownership disputes, delays, restrictions, the kind of stuff that freezes everything. Now he couldn't sell it, couldn't fully use it, and couldn't recover the money he poured in. It's like buying a beautiful car, and later finding out you don't actually have the keys. The worst part? He saw the red flag. He just chose to believe it wasn't important. 24. The startup employee who held on too long. This one is a classic modern story. Guy joins a startup early, takes lower pay but gets equity, the promise of, "This will be huge someday." And for a while, it looks like it might. The company grows. Headlines, investors, valuation climbing. On paper, he's becoming a millionaire. Friends are impressed. He feels like he made the smartest career move ever. Then comes the moment. Opportunity to cash out some shares early. But he doesn't. Why? Because if it's worth this much now, imagine later. So he waits and waits. Then the market shifts. Growth slows. Investors pull back. Suddenly that sky-high valuation drops. Fast. The company struggles, cuts happen, and eventually, it's over. Those shares? Worth almost nothing. It's like watching your winning lottery ticket slowly fade in your hands because you didn't want to cash it in yet. Sometimes the hardest decision isn't starting, it's knowing when to take the win. 25. The too big to fail business owner. This guy had built something solid. Years of work, stable income, a respected business, not flashy, but strong. Then success turned into confidence, and confidence turned into overconfidence. He started expanding aggressively. Bigger loans, bigger risks, because in his mind, the business was too strong to fail. And that's where the danger starts. One bad season hit, then another. Costs increased, revenue dipped. But instead of slowing down, he kept pushing forward, convinced it would bounce back. Except it didn't. Debt piled up, pressure built, and eventually the whole thing collapsed. It's like driving faster because you believe your car is indestructible. Right before you hit a wall, nothing is too big to fail. Some things just take longer to fall. 26. The guy who tried to win it back. One last time. This is the story that repeats itself everywhere. He lost money. Not everything, but enough to hurt. And instead of stepping back, he made one decision. I'll win it back. So he took what he had left and went for one more big move. One last trade. One last bet, one last shot. Because in his mind, this wasn't risk, it was recovery. Except recovery doesn't work like that. That final move failed. And just like that, everything was gone. The part that makes this story painful isn't the first loss, it's the last decision. Because if he had stopped earlier, he would have still had something. But that need to fix it, instantly, wiped him out completely. It's like dropping your phone and then throwing it again to undo the damage. Doesn't work. Never does. 27. The man who became rich overnight and lost it even faster. This one feels almost unreal. He got rich overnight. A deal, an opportunity, a moment, everything aligned perfectly. One day, normal. Next day, wealthy. And when money comes that fast, It doesn't always come with understanding. He didn't know how to manage it, didn't slow down, didn't ask questions. He just lived it, spent fast, trusted quickly, made decisions based on excitement, not logic. Because when everything feels like a win, you stop looking for risks. And that's exactly what happened. Within days, not years, not months, days, the money was gone. Bad deals, poor choices, fast decisions stacking on top of each other, like watching a house of cards collapse in real time. It's almost impressive how quickly it happened, from rich to broke, before the moment even fully settled in. Proof that making money fast is one thing. Keeping it? That's a completely different skill. Which collapse shocked you most? Be honest. Would you have done better?